Hey guys, guess who it is? We are back. We started the Friday wrap early 2020. COVID came about, markets started falling, all crazy things were happening in the world, and we wanted to get a message out to say now's not the time to be reactive. Well, fast forward 5 years, and it's time to get a message out to say now's not the time to be reactive. So I just want to put a little video together what to do in a falling market. Now, if I can get my screen to go across. There we go. General advice warning. I was never here. I didn't say anything. Don't take advice from something that I say here. Let's talk to you personally. However, have a look online today. A sea of red after $100 billion. It is ugly. Okay, ugly. Let's have a look at some charts. The ASX. This is it's 12 o'clock New South Wales time. It's now quarter to 12 Queensland time. So that's half an hour ago. Okay, the market was down 358 points, down 4% in a day. Nothing good can come of that. What do we do? Okay, what's the appropriate course of action? Well, as you know, I have 1,000 one-liners. One of those liners is, if in doubt, zoom out. Up here on the top left, we've got the ASX 200 for the last 12 months, okay? And you can see there, it's gone up 530 points or 6% last year, okay? So today might be ugly, but if we zoom out a little bit, it isn't so bad. And you can see the big drop that we're currently experiencing. If we go out 5 years, which is this top right-hand side one, we're up 1,700 points, okay? 25%, and that drop there is there. If we go out over the past 10 years, we're up 3,500 points, 70% over the last 10 years. So up in 1 year, up in 5 years, up in 10 years, although the day is down horribly. So if I was to say, what do we do? Well, let's just take a step back. If in doubt, zoom out, okay? Don't panic. Take a look at the bigger picture. Now, talking about the bigger picture, it's important for us to ensure that you are invested appropriately. Okay, if you're a retiree and you're worried about the volatility of the share market, you're going to be down here in a moderate style of investment, half growth assets, half defensive assets. If you're young and an accumulator, I'm 46, I'm still in accumulation mode, I'm going to be up here in growth-oriented investments where I've got 90% in a growth-oriented manner, 10% in a defensive manner. But what does that mean? Well, it means that we need to have a time horizon of, say, 10 years, okay? So if I go back to my prior screen where it's all green over that longer period of time, I don't have to panic today when the market's down so much because I've got a higher time horizon or a longer time horizon. What else does that mean? It means that we expect negative years, 2 or 3 negative years in any 10-year period, okay? One of the one-liners I've got is 1 in 5, 2 in 10, 3 in 15. The market's going to go down, okay? We expect it to go down a decent amount in those periods of time. But what's important is that you are invested appropriately so you don't have to react and lose money in the short term, knowing that the long term is, a lot more, safer. Is that the right word? That's the word I'm going to use. One other chart that I want to show you here when I'm talking about investing appropriately, this chart here, the index chart, I use it all the time. You're probably familiar with it. If you invested $100 in the year 1950, the top blue line is the Australian share market, okay? Your $100 became $360,000 in that period of time. This grey line here is money in the bank. You averaged about 6% and your $100 became $7,200. Now, if you play it too conservatively, you risk not getting the wealth or accumulating the wealth that you could have because you were concerned about the volatility. If you took it too aggressively when you're in retirement, well, you risk these short-term fluctuations where it is going to be concerning. So what's important on this previous slide is that you're invested appropriately for the time horizon that you've got available to you so that you don't have to worry about these things so much, knowing that longer term you're more than appropriately invested. We can write out the negatives that we expect are going to happen. They always have happened. COVID is here. GFC is here. COVID is here. I'll go back to these charts. The Donald Trump tariff situation is here. The market doesn't go like that. It'd be great if it did. It's volatile. It's a roller coaster. But we want to make sure you're invested appropriately so that you don't have to panic and do silly things when days like that happen. If you are a bit stressed, feel free to give me a call. You've got my details. But let's ride the wave and see what happens.